There you go. Can you
There
hear
we
me?
go. Now I can hear you. I've been listening to you guys talk the whole time.
All right, Nick. What a pleasure to meet you.
Oh, it's a pleasure to be on your show. It's funny. I'm all too like this whenever I listen to either my friends conversing about stocks or charts or anything. I just wanted to jump in. Whoever you had on there, I think it was his name was Blake. Multiple times
Yeah.
I found myself either going yep, yep, or no, no, or yep, yep. I just have a problem with one.
Yeah. We Blake has assembled a pretty good team here. You know, one of the best I've worked with. And you know what I noticed? You're a big believer in community. I love your tweets. They're very people-centric. You also, I don't believe, have any axe to grind. You're just out there trading for yourself. Am I correct?
Yeah, you know, there's been a lot of times where I've been offered to be a part of subscription services or whatnot, you know, but I just feel like at this specific time in my life, especially, I mean, just judging by the tweets, you know, you see me make, I don't know if it's, I kind of get off on just helping people, Dale. And
yeah,
it's been a thing in my life for a long time. It's not just with trading. And when I found out that I could do it with this, you know, and this kind of platform just kind of expanded itself into what it is now. But yeah, being able to help people like that. And as you see, every other one of my tweets is more of like a positive, uplifting. There's an armchair trader for everything, every currency, every commodity, blah, blah, blah. But you'll never have someone kind of tying it all into more about life as well. Because if it was just about this, Dale, I would have offed myself a long time ago.
Yeah. In fact, here you go. Here's one here. Optimism is a choice. Happiness is a choice. And then look at all the people that respond to your tweets. So
yeah, it's funny, Dale. I get more response to that than I do anything, even the private messages. Sometimes it's people gravitate towards that. It's once you see the response that I get from it, it's kind of like, why wouldn't you do that and do more of it? Because people need it in their lives. They're so tied down by this system we're thumbprinted with. I mean, we could go down the rabbit hole for a long time, and that's why I said I 100% want to come back on where we can talk about a whole host of issues before we get, you know.
Okay, well, you know, that's a great segue. So you said you know, this is kind of like in your DNA before you even got into trading, and I always ask people how you got involved in trading and what was the catalyst and what was the beginning of the journey like.
It's funny you brought that up because I was talking about this with my business partner last week, and I don't know why it's come up so many times in the last few months, but it has. And yeah, I don't know about other people's experience, but between my group of friends, at least are traders, we like to call, you know, your trading education, your university. I got blown out 3 different times before I even made it. Back when I worked.
Great transparency.
Yeah, we can start just real quick to give it without going to, you know, make a long story short. Back in college using, let's just call it quote, hustled money when I was in finance and accounting school at CU Boulder. I probably put all that hustled money into penny stocks, even though I knew, right? I got the first iPod and I looked at it and I said, I should put every dollar, this $10,000 into Apple stock. You know, this is back in 2000 and 2001. And instead, of course, I put in penny stocks, got blown out of every position.
Well, okay, so tell me how, did you have to get hit in the head with a ball-peen hammer, with a ball-peen hammer to know it hurt? And how did you overcome your inclination to want to hit home run balls?
It happened, Dale, so many times. It happened again at 24, blown out again. And then when I was working in private banking, and then when I retired and was able to recreate a nutritional company with one of my best friends, ended up coming back to the market at 27 years old, got blown out again for another, I would say 20 to 25 grand. And then when I was 28, came back with 13 and a half and turned that into 7 figures. And that was my 4th time coming back to it. And I honestly wanted to give up. People think that, you know, they see some people that have a finished picture, a finished understanding of trading and trading commodities or, you know, any different kind of market. And they see it as, wow, that person went from 0 to 100. It's never like that. You know, you get whomped on so many different times. And I continue to have the lessons, you know, and any trader, whether it's in any kind of market, will continue to be like, just when I thought I didn't know this happened, right? I was on a clear trade, and then boom, And, you know, it is what it is. But if you can make it through that without getting completely blown out of the water, then you know, you're okay. And I didn't do paper trading. I probably would recommend that to people. As you can see, Dale, from some of my skiing stuff, I'm a very risk-averse personality. So that kind of translated right to my trading, where most people through my life and a lot of things will have to kind of sack up to pay to play, so to speak. I was the kind of person where I'm gonna like put it all down and get whomped on and have to use more risk in my strategies going forward to not get blown out, right? Taking losses quicker, letting my gains go. So.
Okay. So I noticed you, I'm showing a gold chart here.
Yes.
Nick, and, I noticed you, and it was back in September, and gold was trading up around 1330 or so, on its way to almost 1360.
Yeah,
and you were beginning to buy. Yeah, you were beginning to buy bearish gold ETFs. I think Dust, and you know, some of those.
Right around 1350. Yeah, is when I went.
Yeah.
You know
what did you see up there
I'll tell you, that's
that made you bearish? Because you know, I was getting confirmed highs on momentum and everything. There was nothing I really saw up here to make me bearish. I'm wondering what you saw, and what were the contingencies that got you to take that contrarian position?
Okay, so yeah, you know, that move reminded me of the exact move we saw after the election, but a blowout low. You know, the indicators coming off of 2016's gold and gold miners season, to have that kind of trouncing happen after Donnie got elected, and literally just paper shorted the metal market.
Donnie Osmond?
Yeah, Donnie Osmond, after Donnie got elected, and they paper shorted it into oblivion, right? And I remember some of the miners just getting destroyed after having such a good year. The indicators hit, you know, completely oversold positions, and same thing, all of Wall Street, all of CNBC, Pumps R Us was massively bearish. We are 100% going sub 1,000 gold, and that's when you know, just load the boat. Same thing on 1358. We actually, Dale, when I was charting it, if you look at it, because you have a perfect chart up, when it hit that 1342, 45 area before it made that last blowout move, I thought we were going to actually turn there, and I started adding shorts there. And the only reason we went further was because of that North Korea scare. But so Dale, to answer your question without going on too many tangents on what I saw and gold there, is that the MACD for the yearly, so whenever I trade, especially gold, or am looking at the currency pairs like, you know, the dollar yen, which obviously gold trades off a lot of, I like to see on the yearly, right? Trading a
yearly chart?
Yep,
you mean not a monthly, but a yearly chart you look at.
Yearly, and then daily. So I'll compare a yearly and a daily so I can get the exact levels. But if you try to go in any smaller, in my opinion, you're just going to get blown out on the day-to-day moves, because you see the kind of games they pull where they'll just either dump a massive amount, you know, to blow out basically the longs, or vice versa, you know, on the shorts.
Yeah, you know, Nick, I say if you can't be wrong for a day, how could you be right for a week?
Exactly.
You feel that way?
Yeah, no, and Dale, that was one of the things that I had to learn, you know, is especially when I trade commodities and currencies, I like to swing them more, because if you're trading against a computer system, right? And the computer is programmed with its algorithm to wax you out of the market. That's what it's trying to do.
Because it has no emotions.
Exactly. Well, and it's that whoever's designing the algorithm is designing the parameters to dominate retail. That's the whole point of it. It's just a siphoning of our wealth while we're trying to battle against the quants that are run by the huge, you know, investment banks and corporations, and, you know, central banks, you know, most importantly. And
so gold's trading down here around the 1280 level. You have a vibe? Are you neutral? What are you thinking in there?
What's funny is it couldn't have been a better time to talk about gold right now. I mean, even just looking at the chart, probably a beginner can see that we're at a huge inflection point, right? We're banging up against the now 1276 that loves, it's been holding the last, gosh, now, what is that? It's been holding almost a month, that level, pop back up and it's come back down. And now naturally, again, like that guest you had on before, Blake was saying, that the whole sentiment is, bullish, the USD JPY, right? Well, for me, I don't know what people are looking at. Like I said, if you pulled up, and you don't have to, but if you looked at the USD JPY chart, not once on the intraday, if you look at a yearly, has the MACD traced into the bearish signal and recovered without falling down first. So what we have right here, right, is that 113.3 level. I think today, see, it's just sitting at, you can see it. Yeah, you're hovering your mouse right now. This is the level. And for the gold bull,
this is a daily. These are, I'm showing dailies for you, Nick.
Yep, perfect. No, that's perfect.
Okay.
That's perfect.
Right.
So you see that, it hit that triple top again at 114.5, right? And is now starting to curl down. Well, there's gold bulls that say that, hey, it's okay. We're going to do a little retracement to 1260 or 1250 and then go. If this turns up, right, if we turn back up and hit that 114.5 again, I wouldn't be surprised if we broke through. And then it's the major pain train for gold. We're nowhere close near a bottom. We could hit 1200 before we hit anything. That's why, as far as a long-term gold bull, which I am, I kind of wanted to see this fail and start heading back down towards I bet we would test that 108 or 107 area on the next, big drawdown. But if it holds, and this is people need to heed that warning. If that holds and turns back up, to me, that chart just turns massively bullish. The US.
Well, I mean, isn't it a possible scenario that the yen breaks to 112, 112.50, maybe even 111 and a half,
and then turns up,
and gold pops to 1310, and then they both reverse?
Yep, absolutely could. And if it does that, if it goes into that, then we're just back in this channel. It's like Goldman Sachs channel 1210 to 1270 or whatever they predicted for the entire 2017 year. I mean, if that happens, it almost makes you wonder, like anybody even thinks that they're not in full control of this. That's the difficult part, Dale, with these commodities, is that once again, you kind of just have to trade the way the computers are making it go at the moment. Because as you can see, what was it on, was it Friday, right up against the long term, gold was looking great and somebody dumped 4 billion, just in one trade. Yeah. I mean, that doesn't just happen with all these other pairs or metals. You don't see it in palladium or platinum or anything like that. You see it as a way to suppress what they want.
Okay. And so you're a believer that the paper market manipulates gold prices so that people don't get too nervous, because the bull market in gold is kind of a no confidence vote on the economy.
I mean, I just, personally, I don't see how anybody could see it any differently. Just from a fundamental standpoint, if you're looking at things like silver, and how much it's used in our daily.
Well, they do it there too. We had some flash crashes.
Silver may be worse, Dale, actually. I mean, where the price of silver compared to what it's used for and how much it costs to mine is it's a crime against humanity, right? Along with the credit agencies and all the other, bullshit. But I don't know how PG of a show this is. Maybe we should.
You could.
Let's keep this one, but yeah, there's a lot we can talk about. So yeah, I say the way. So gold right now, this is almost like a sit back and see. I had longs at 1276. It hit 1286 or 1280. Yeah, 1286. I got stopped out for half mine at 1280 on the come down. I'm still holding the other half kind of as I'm neutral right now. I mean, if I had to pick a direction based off only what the USD JPY is telling me, I would go short-term long gold. But I'm definitely in a minute camp, but I was at 1358, and I
certainly were up there. And it looks like some of your followers came to the room to ask you a question.
That's awesome.
Asking, what do you think about the crude oil market here, Nick? Lee is saying that he thinks you're short from about the 56 level.
Yeah,
in
so
the
I
energy
am. I have a
market right here.
56.10 average on short, and looking at crude, I'm glad you brought it up. This is the first, so oil, I have made more money on oil commodities, or as far as commodity, than anything in 2017. The oscillations it gave us every time when it finally broke through that 52, going down area, when it finally broke 50, I think it was in, I don't know, you maybe could pull it up for me. When was that in? Let's see. Hold on.
When it broke through what?
That the March area, right? I mean,
Right
these
here.
waves, Dale, if I could get every single chart I ever traded to look exactly like this is what I do. When you first get that breakdown to that 47, that was in March, April,
Right here.
that was such a good play. And it just traded perfectly. The RSIs, the STOs, and the MACDs all bottom right there. It's just perfect for long. You got all of Wall Street and pump start. I was talking about how oil's going straight to 40. Okay, insta long. And then back up, couldn't even get to the 55 mark, and it kind of fuddled down again. And it just, those rolling hills like that, if you ever get those rolling hills on a defined either bearish pattern or bullish pattern, there's nothing better to trade. But so the question,
so on your short position here, I'm going to pull up a weekly. Because we kind of had a breakout.
Yep.
I don't know, maybe you could call it. Are you just looking for a pullback, or is this?
Yeah. So
perhaps.
It's kind of got overextended there. What's funny is when I actually, my first short was at 55 or 54.99, and then I started adding up. This will be. I'm on the pain train, obviously, right now, and there's a darn good chance that I will get squeezed out of this, because I'm only upside down $1.50, or $1.10 right now. Actually, it's only 56.92. So about 90 cents or 80 cents on my average, but I'm not going to hold it into a Saudi crisis, right? This is the first time fundamentals have taken over now in the last year and I'm also not so sure that wasn't intentional, just because they're so pissed about not being able to sell their oil for so much money that this whole, thing might have been fabricated. But be that as it may, it doesn't matter. If it doesn't turn,
I've interviewed a guy named Kirk Spano. Familiar with his work? He's does a lot on energy.
I do know.
Kirk's looking for a hot conflict in the Middle East between Iran and Saudi Arabia and us.
Yeah, it 100% could, Dale. The thing is, so if we're just talking technically, like, I don't know if he's Bama Broker.
He's
a great commodities trader, and he has this indicator he uses, which is his XCOM and WTI ratio. And
he's a fan of yours. He's a fan of yours.
That's cool that he is, because I'm a fan of his. The technicals where oil is right now, it's so overbought, it's not even fun. Right. All things being equal, with no, major war in Iran.
Armageddon. Yeah, without Armageddon in the background.
Yeah. Oh, we would have come back down to 51 and maybe even lower. But so, I know friends that have covered. I mean, I haven't. It's it's still, now we're at 56.88. I'll probably cover my short at 50. If it does a blowout move past that 57, like 50 it hit, or 57.60 it hit last week, then I'll just take my lickings and go. But because I've had so many good trades on oil this year that sometimes that's the other thing, Dale. It's about just knowing when to not get whomped on. That was one of my, every trader I think goes through that is really.
How about a lot of people have a hard time being flat? Do you? Not being involved.
Oh, I can be. I don't like to be in limbo on anything. First of all, I either wanted to make a blue, shit or get off the pot with any of these charts. And we're kind of on that with a bunch of things, oil, with gold, and some of these currency pairs. I heard Blake talking about the euro dollar as well.
What do you think of the dollar and euro? And I know we only have about 4 minutes, because
that's okay. Same thing. I agree with him. I think the bias is going south, and from the move at 104. you know, I was really long 104, and I rode that sucker all the way to 119 before I got out. And it was that same, you know, that kind of the Donnie move, the election
Right.
blowout. And now, you know, look at it. It looks like it's hanging on, and people are pitching it to the downside. And I don't know, man. I agree with him, and I think we could see that 118, 119 push, and the dollar go back down to 90. You know, but
okay, yeah, that's viable. Any view on the parabolic nature of what's been happening in equities before I let you go?
Oh yeah, that's a big.
And the bond market.
We 100% have to do this again when we have more time, because I want to talk a lot about like fundamental stuff like you're asking right now. I mean, so just where equities have gotten on this melt up, this daily ramping of, you know, of all sorts of, you know, fixed income or fixed assets. You know, when you have the plunge protection team not disclosing any of their trades, for all we know, period, end of story, they could own 10% of Apple. We don't know. We have no idea.
Well, and the Japanese DOJ did it.
Yeah. Oh, so either way, I liken it to, you know, we did a lot of, you know, in the earlier part of our stock trading career, we did a lot of awareness stuff for OTC companies. I liken what the Federal Reserve does and the central banks of buying as nothing but a pump job. It's the pumpers have bought 4.1 trillion in equities or assets across a broad range of things, and now the pumpers want to sell. Right, so they're trying to keep it up. It did them no good when Donnie got elected to crash it. Then they need to get it up first. So the only thing that made sense to me, and this is the point I'm going to leave you with, is that the second.
Well, they were successful for a year now.
That's right. So the second he won, they said, we have to push this thing beyond belief, right? Because why would they want to sell down here, Dale? They want to pump it up and get mom and pop and every other hedge fund in before they pull the rug.
So you think they're distributing now?
So now let me ask you a question. The global elitist period that run a lot of the markets, period, end of story, they hate Donnie. So unless we've seen a major power shift that we, the peasants, are unknown of, right?
Yeah.
Does it sound more likely that they're going to let the thing push to 24 to 25K on the Dow so Donnie can go, look at me, look what I've done, this is all me? Or does it feel like they're going to crash it and lay it at his feet after every one of these tweets and go, what's up now, Donnie? Isn't this you? You know, and for me personally, I can't see how they let him do that, you know, but who knows? The powers could have totally have changed and we could straight melt up to 25K. I honestly stopped shorting the indices except one. I've been short the Russell and IWM since it just went. It reminded me, Dale, of the exact same technicals as 1358 gold. I mean, it was just complete.
Kind of actually the monthly is kind of a megaphone formation, which is kind of a negative formation, and it's back under its breakout. So good trade selection.
Yeah. So
and
far,
then also, if you're right about the dollar and the dollar gets whacked, Russell does better during strong dollar times rather than weak dollar times.
And you know, to me, it was just a sympathy trade. You know, when any kind of like the shippers start moving, like dries or any of those move, and then tops and all the other sympathy shippers move, or some of it happens in the biotech. The mid caps based on a tax plan are going to go up. That's never going to happen or hasn't happened. Goes up what, 20%? The Russell. I don't know what the Russell's up since election. It's something crazy, right?
Yeah,
so it's just been pulled up with no bearing.
It was like the Nikkei.
Yeah.
So Nick, I want to call you my trading warrior brother now.
You got it.
We know each other, and the only way people could follow you is on your Twitter handle, right? And I have.
As of now, you know, I mean, we might be setting up some other stuff in the future. I have a lot on my plate. I'm in Florida right now, and I run a cryotherapy business out here. We will be moving back home to Colorado, and then I'll be able to trade full time more, and I'll have
what kind of therapy?
It's a cryotherapy business. They look like you know, those big stand-up tanning booth looking things to pump liquid nitrogen gas around you. So we own that. We own a medical spa out here. So we kind of do all sorts. That's what myself and my soon-to-be wife are in that industry. But you know, trading. I'm just at heart, Dale. I'm just an athletic math nerd. That's what I've always been. You know, people look at me and they're like, "Wait, you just play sports?" I go, "No, all I really like is, you know, gaming and math. Even though I look like all I do is play sports, you know." So it's pretty funny. But I would love to come back on,
man, bro.
And it's been a pleasure.
So,
yeah,
it was great. And your Twitter handle, just to make sure I have it right, is at Silk Dynasties FX.
Yeah, no, so it's at Silk Dynasty STX, like stocks, right? So Silk Dynasty
STX.
Yeah.
Okay, buddy.
And
all
then,
right, well, thank you so much.
Dale, let's definitely set up another time where we got like an hour where we can really go over some charts and we can really go over some, you know, great down the rabbit hole woo-woo bias, because that's like, you know, I can talk about that stuff forever. I love it.
All right, well, you know, I hope pips rain down on you the rest of the year, and
let's
have a great holiday season, and
I'm all about
we'll do it again, and we'll do it again in 2018, Nick. Thank you, buddy.
Yeah, let's definitely do it. Okay, buddy.
All right, thank you, Nick.
It's a pleasure.
Everyone thank Nick. You can follow him at Silk Dynasty Stocks, STX. And that's a wrap for us today. Everybody have a great day. See everyone for Turnaround Tuesday. And don't just count your pips, count your blessings. And look forward to having a great week with everyone. You too, Ash. See you, Ronan. See you, Jack. See you, Dominic. Adios. Thank you, Steve Olge. Thank you, Blake Morrow. And maybe we'll have Nick here tomorrow to talk about Bitcoin Cash. See everyone tomorrow. Adios. You're welcome, Kevin. See you, Nick.
See you, buddy.